Hello and welcome to Virtual Investor Conferences. My name is John Viglotti. On behalf of OTC Markets, we're very pleased you joined us for our next presentation from Intellabridge. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome John Eagleton. He's the Chief Executive Officer of Intellabridge Technology Corp, which trades on the OTCQB venture market under the symbol KASHF and on the CSE under the symbol KASH. Welcome, John.
Thanks, everyone. Thanks to the CSE and OTC for having me here today to present. There are forward-looking statements in this presentation. So I want to introduce the future of banking with positive social and environmental impact. One doesn't normally today think of banking, social environmental impact when it comes to banking, but there are about 120 million Americans who actually have an account with a credit union, and they have accounts with credit unions because credit unions are nonprofits, and credit unions, they care about the local community and giving back to the local community. About 50% of Americans make donations every year to charitable organizations, about $374 billion. Another 50% when they go into a store to buy something and they're asked whether they want to round up and make a charitable donation, actually round up. 50% don't. And the reason 50% of Americans generally don't make charitable contributions is because either they don't understand what the impact is, or they're living paycheck to paycheck and every penny counts. So how do we create a product that makes it easy for customers to make donations without the money coming out of their pocket? How do we automate that? And how do we make every transaction at the point of sale generate a charitable donation? Introducing Karma. So Karma, we are a fintech company that is a cash rewards program that allows customers to earn cash back from merchants and donate that cash back to charity. So if any debit card, credit card that you have, you can connect to our platform, earn cash back, and donate that cash back to charity. So last year, there was about $7.2 trillion in retail sales. If 1% of that were given back, that would generate about $72 billion in charitable donations. Within our network, our merchants are giving on average 5% cash back and up to 20%. So the potential impact is huge. How do we do this? So we have been building a network of merchants, about 15,000 merchants with 50,000 store locations, so national brands like Target, Walmart, Gap. We're expanding that network to include everyday merchants, groceries, gas, entertainment. Our network currently includes bars and restaurants, about 10,000 of them, and we're continuing to expand that network. So customers earn the cash back and then they can pay it forward. So they can pay it forward to charitable causes. Our system is built around the United Nations Sustainable Development Goals. So no poverty, zero hunger, climate action, life below water, ocean protection, gender equality, et cetera, et cetera. And other companies like Fortune 500 companies are also using Benevity for this. So we're partnered with Benevity, which gives us access to millions of charities globally. We have three ways we make it possible for customers to actually make these donations, to earn cash back and make these donations. The first is our retail product. We issue cards called Karma cards, which customers can apply for. It's a prepaid debit card, and there are 5 different types of card programs that automatically donate to different charities and that rotate every month. So the one you're looking at on the screen here is the Ocean Saver card, dedicated to protecting the oceans and charities that are protecting the oceans. There's a Climate Action card. There's a Hope Giver card to help homelessness and poverty, and then there's a health card addressing health initiatives. So our revenue model from the retail product is based around subscription fees, monthly subscription fees. So customers can pay $0 if they don't want to pay anything, or they can pay $5, $10, $15 a month. On average, We're now getting, the presentation says 450, but we're actually up to about 650 on average of people who are paying subscription fees. The more you pay, the more cash back you get, the more you donate. We also generate revenues from merchant fees, so about 50 basis points. As we expand our merchant network, it means more transactions will generate cash back, which means more revenues for the company and more donations are going out. And as a card issuing company, we're generating revenues from interchange. Right now, it's about 40 basis points. We're in the process of upgrading our partners and our network, which will actually give us about 150 to 170 basis points per transaction. Our key performance objectives over the next few years is to acquire close to about 1 million users, generating about $7 million in revenues. The second channel for Karma is a B2B model, Karma Connect for financial institutions. This is actually in development right now. This is a very interesting business model because it allows us to access the 10,000 or so credit unions and community banks. I've met with a number of these credit unions and community banks. They're very interested in the product because it's very much aligned with their mission of supporting the community. So it's a great way for them to go to their customers and say, look, this is a way you can earn additional cash back and donate that cash back to the local community. So that represents about 167 million potential customers in the United States. The revenue is built around a monthly fee. It's very much a SaaS business model based on the number of users, and then we're generating fees from merchant cashback. This allows us to scale much faster, and I'll get into the CAC rates later, but obviously CAC rates on the SaaS model are significantly less. So we're currently integrating with, the great thing about the space is that these 10,000, we don't have to integrate with 10,000 firms. They all use about a dozen different core technology providers, which means that we integrate with these core technology providers, and those core providers can turn on our service to the credit unions. Next year, we're looking at Karma POS for brands. So, you go into a store and they ask you if you want to round up. And when you pay at the point of sale, with our POS system, it's a reader that sits next to the traditional POS reader for payment and allows people to tap the reader and automatically Karmify the card that they're using. So whether it's a credit card, a debit card. So if you imagine like Target, they've got about 2,000 stores across the United States. 80% of Americans have been at Target. That's about 220 million people. So getting our readers into a store like Target, a merchant like that, allows us to access customers a lot faster and scale faster. This revenue model is based on, there's no fees for the merchant. It's based around the cashback generated, the 50 basis points. Within our product, I think one of the most exciting things that we've seen in terms of feedback from customers and from credit unions and community banks is Karma Impact. It's one thing to give, and one of the problems, as I mentioned earlier, is the fact that people don't necessarily give because it's 45 cents round up, and they don't really understand what the impact is. So what we've done is we've taken the feedback from customers and built this impact product around customers so they can get tangible results on what their impact is, how many trees they're planting, how many meals they're providing to homeless people, how they're helping people who are victims of disaster and need disaster relief from the American Red Cross. Within Karma Impact, the other thing we do is tell real life stories. It's a little bit like what Legible's doing, bringing these stories to life and giving them the feedback of, okay, you've donated to this particular charity. This is how your money is actually having an impact. So we tell these real life stories that are generated from social media, from some of the work we do using AI, and provide those stories as feedback to customers. We also use Karma Circles. It's a great sort of referral marketing engine that allows word of mouth marketing for customers to sort of understand what their friends and family are doing in terms of impact and building a community of that. So sort of leveraging the communities that you see around credit unions and community banks. We actually did an experiment where we turned off all our paid advertising for a week, and the number of customers actually only went down by about 60%. So it shows that there's very good word of mouth marketing coming through features like this, Karma Circles, referral marketing, and other word of mouth marketing. Our competitors are really focused on climate action. So you probably know Aspiration Financial, Tree Card, and others. they're really about rounding up and planting trees. What we've noticed, especially with Gen Z, is 96% of Gen Z wants to do more than just climate action. They want to do, they want to address a lot of the other social and environmental goals and SDGs. So we also have Roundup within our product because people use it. It's sort of an accepted feature within a product like this. So we launched the product about 4 months ago. We have 4,000 cardholders on our platform. We actually have about 20,000 people signed up, so at the top of the funnel. This quarter, we are in the process of integrating with Jack Henry and other core providers to allow our product to be accessible to credit unions and credit union customers. Next year, we're going to be focused on customer growth. Our customer acquisition rates, as I'll get to in the next slide, are extremely low, and that allows us to grow much faster. And then, as I mentioned, we're going to be launching Karma POS to get into the merchants, the reader with the merchants, and allow us to scale through that platform. So when we first started, our CAC rates were about $80, $90. We thought, okay, that's pretty good. Revolut, Chime, they're about 150. Traditional banks paying about $300 to acquire a customer. We've managed over the past year to reduce our customer acquisition rates at the top of the funnel. Again, the slide is even in the last few weeks is a little bit out of date. It says 367 at the top of the funnel. We're now down to about $1.25 per customer at the top. So that's someone who's coming in, they're excited about the product, they actually sign up. They don't necessarily apply for a card, but they may connect a card. And then at the bottom of the funnel, when people are actually getting cards and using the cards and become active, it's about $16 CAC rate. So we're really happy about those results, and we're at the point now where we've optimized, obviously continuing to optimize, but ready to scale. So so we use Facebook advertising as one of our main channels. We social media marketing, influencer marketing, and then one of the great things about the marketing strategy is being able to leverage charitable followers. So like Feeding America, they have over 200,000 followers. Most of these charities on average have 50,000 to 100,000 followers. So it's good for the charities, it's good for us, good for the customers. These are targets based on Revolut's first 5 years in business, and we think these are achievable targets. Even though we're quite a different company from Revolut, we're not a neobank, we're a fintech company, but it sets a good benchmark for us to achieve in terms of targets. And I think, given our CAC rates being 10 times lower than a company like Revolut, I think we have I think these are realistic. So as I pointed out earlier, there are 3 lines of business: Karma Card, Karma Connect, and Karma POS. So you can see here, the first couple of years are more focused on Karma Card, since that product is in production, it's been launched. Karma Connect will start to see revenues coming in first quarter of next year, and Karma POS by the end of next year. Revenue targets. Similar, as you can see, one of the reasons we're focused, we're going to be focused highly on the B2B business model because it's much more scalable. Even though the revenues and the margins are less, we can scale faster. So as you'll see by 2028, most probably about 50 to 60% of the revenue is coming from the B2B model. So we are a very early stage company. As I said before, we got 4,000 customers currently on the platform. We're generating just a few $1,000s a month in revenues, but we've validated our business model, and we expect that to grow going forward. Happy to answer any questions.
Any questions from anyone in the audience? Nope.
Just one question. You mentioned having a point of sale and then sitting next to that is a Karmify. Just can you explain a little bit to a technological troglodyte how that would work?
Yeah, so we call it Karmify. So Karmify is basically you can take any credit or debit card, connect it to our system, and earn cash back that can be donated. So literally you sign up into the application, you enter the first 6 digits of your card, because we need the BIN number in order to track transaction data. We get that transaction data, and then we send that to the merchant to verify that the customer has actually done a transaction. So you take your Bank of America card, you go to Starbucks, or actually a better example, Gap or Target, and you earn $5 of cash back. And then and part of the onboarding process, you've decided where you want that cash back to go, whether you want to go to climate action or ocean protection, and then we send that cash back to Benevity, which then distributes it to the charities.
Can you just talk about you're just ramping up now, so talk about the kind of the business plan. Are you going to be biasing toward growth, and how are you going to fund that?
Yeah. So we are raising capital to scale that. So $1 million actually gets at a CAC rate of $1.25 because it's just under 1 million users at the top of the funnel, about 100,000 customers at the bottom of the funnel, making us actually EBITDA positive. So obviously you want to scale. There are competitors out there. They're more focused on the B2B space and providing this similar service, but focused on roundup to credit unions. Those companies have raised $40-50 million. So the space is going to get probably crowded very quickly. So we do have a first mover advantage, but we want to move fast. So we will be raising more capital to scale faster.
All right. I think that